Ethereum's key metric is flashing a buying signal we haven't seen in years. Gold just had its best quarter since 2016, while crypto assets are bleeding out. U.S. tariffs are hitting levels not seen since the 1800s. And behind the scenes, states are quietly lining up to buy Bitcoin despite the market downturn. Today, I'm connecting these dots to show you exactly what's happening and how to position yourself while others panic. I'll also share the exact strategy I'm using to navigate these volatile markets. I'm pretty sure it'll help you protect and grow your portfolio. If you've checked your portfolio lately, you probably noticed the bloodbath across crypto assets. And it's not just small altcoins getting crushed. Let's look at the shocking data from Q1 2025. Gold has absolutely dominated with an 18.5% increase, while almost everything else is deep in the red. Ethereum is down nearly 40%, Bitcoin miners are down 43%, and even tech darlings like Nvidia have plummeted over 20%. This isn't random. This divergence tells us something critical about market psychology right now. According to Miles Deutscher, this is a classic flight to safety scenario, investors abandoning growth assets and flocking to traditional safe havens. But here's where it gets interesting. While casual investors are panic selling, institutional money is quietly positioning itself for what comes next. After spending years researching market cycles for my comprehensive DeFi guide, I've noticed a pattern. These dramatic divergences often signal major turning points. The smart money typically moves before retail investors even understand what's happening. Look at this chart from Altcoin Daddy, showing Ethereum's MVRV ratio dropping below 1.5. For those new to crypto metrics, MVRV compares an asset's market value to its realized value, essentially showing whether the current price is above or below what investors paid on average. When this ratio drops below 1.5, it has historically marked excellent buying opportunities. The last time we saw these levels, Ethereum rallied over 300% in the following months. While most retail investors are panic selling, smart money watches these indicators to time their entries. The weekly crypto RSI Heatmap from Kyle Dupps reveals something fascinating. Most coins are now in the neutral or weak zone, with an average RSI of just 36.42. When we see widespread weakness like this, it typically precedes a broader market move. Notice how altcoins are showing almost non-existent relative strength? This usually happens right before either a further capitulation or a significant reversal. In my experience analyzing market cycles for my DeFi research, these moments of weakness create the best opportunities, but only if you know exactly which assets to target and when. Here's where things get really interesting. Miles Deutscher shared a chart showing reciprocal tariffs potentially reaching their highest levels since the 1800s. This is a massive macro factor affecting all markets. Anthony Pompliano points out the irony. Imagine selling stocks of American companies when economic policies are being put in place to boost the revenue and profitability of those American companies. The definition of insanity. And now we're seeing Canada indicating they'll remove tariffs if the U.S. does the same, according to Ash Crypto's breaking update. This potential resolution could trigger a significant market shift. Understanding how these macro factors influence crypto markets is essential for anyone serious about building wealth in this space. Despite the price action, institutional adoption of crypto continues at a breakneck pace. According to solid intel, Alabama has introduced a bill allowing the state investment board to invest in Bitcoin and crypto assets. And this isn't isolated. From Kyle Dupps' comprehensive update, we learned that Minnesota is proposing similar legislation. BlackRock just registered as a crypto asset firm in the UK. Van Eck is filing for a BNB ETF in Delaware. Circle's USDC is exploring an IPO. The growth numbers for Maria Shun are staggering. In just 5 years, we went from 0 ETFs to approved Bitcoin and Ethereum ETFs. Stablecoins grew from $4 billion to $227 billion, 57x growth. DeFi expanded from $600 million to $96 billion, 160x growth. While retail investors focus on short-term price action, institutions are building infrastructure for the next decade. The final piece of this puzzle comes from Injective's data on tokenized stocks. Their platform now offers tokenized versions of major stocks like Tesla, Robinhood, Nvidia, and Google. This represents the convergence of traditional finance and crypto, a trend I've been documenting extensively. The weekly trading volume chart shows Injective dominating this space with consistent 80 to 90% market share. The tokenization of real-world assets represents a $100 trillion opportunity that most crypto investors completely overlook. So, what does all this mean for your portfolio right now? When we connect these dots, Ethereum's MVRV signal, widespread RSI weakness, growing institutional adoption, global tariff tensions, and the accelerating tokenization trend, a clear picture emerges. We're experiencing a temporary divergence driven by macro uncertainty, but the fundamental adoption curve of crypto continues upward. These are precisely the moments where life-changing wealth is created, but only for those who understand how to navigate them. That's exactly why I created my comprehensive DeFi guide. After years of researching this space and helping others navigate these volatile markets, I've distilled everything into a step-by-step framework anyone can follow. For just $4.99, less than a typical coffee, you'll get my complete playbook for identifying opportunities others miss, positioning yourself ahead of institutional money, and building genuine financial freedom through strategic DeFi investments. The link is in the first pinned comment below. Whether you're just getting started or looking to take your crypto strategy to the next level, this guide will give you the exact blueprint I use personally. Remember what Maria Shin said, zoom out, we've come far. While day-to-day price action creates fear and uncertainty, the 5-year growth trend is undeniable. The smartest investors are positioning themselves now, while assets are discounted and fear is high. They understand that these moments of maximum pessimism create maximum opportunity. If you found value in today's analysis, make sure to like this video and subscribe for daily updates on the crypto landscape. Leave a comment below with your thoughts on which of these developments you find most significant. And if you're serious about transforming your approach to crypto investing, check out my DeFi guide in the comment section. It might be the most valuable $4.99 you ever spend. Stay ahead of the curve, and I'll see you tomorrow in the next one.